On Tuesday, U.S. nat gas futures rose above $2.35 resistance, but has retreated below the $2.30 by the end of the day. The upward momentum is fueled by a combination of seasonal demand, record-breaking LNG exports, and China's expanding use of natural gas in transportation. However, near-term demand is expected to remain subdued. National demand over the next 7 to 15 days is predicted to be low due to moderate temperatures across much of the U.S. The northern part is seeing above normal temperatures, resulting in lower heating degree days, while the southern regions, though still experiencing above-average cooling degree days, are past peak cooling season demand. Meanwhile, WTI crude oil futures rose by 1.5% to settle at $71 per barrel on Tuesday, marking a second consecutive day of gains. This uptick was fueled by ongoing supply disruptions and the growing expectation of a Federal Reserve rate cut. Supply issues were exacerbated by Hurricane Francine, which knocked out over 12% of crude production and 16% of natural gas output in the U.S. Gulf of Mexico. Additionally, Libya's declining oil exports contributed to tighter supply conditions. Market optimism was bolstered by speculation of a 50 basis point Fed rate cut, which is expected to spur economic activity and boost oil demand. However, gains were capped by weaker-than-expected demand growth in China, with disappointing economic data raising concerns about the country's slow recovery. The key impact of falling oil prices is the increased bullish pressure on natural gas prices. This occurs because reduced oil production leads to a decrease in natural gas production, which is a byproduct of oil extraction. Meanwhile, India's LNG imports continued to rise in August, building on an 11% year-per-year increase in June and a 15% jump in July. According to provisional data released on September 16 by the Petroleum Planning and Analysis Cell of the Ministry of Petroleum and Natural Gas, LNG imports for August reached 2.8 billion cubic meters, reflecting a 2.4% year-per-year increase. For the fiscal year ended March 2024, India imported a total of 31 billion cubic meters of LNG, up 17% year-per-year. The market's upward momentum is fueled by technical factors and supply-demand fundamentals, leading to a tight environment in the near term. A breakout above the $2.35 level could shift the trend to the upside, with the next major target set at $2.40. This rise is backed by a bullish outlook, with prices trading above the 200-day moving average of $2.29, which controls the intermediate trend. On the other hand, a sustained drop below $2.29 could suggest renewed selling pressure. If the market fails to hold above this support, it may reignite selling pressure, with main support found near the $2.20 level. Please like, subscribe, and comment to support the channel. See you in the next one.